everyone. Welcome back to Prime Wealth. We're so glad you're joining us today.
Absolutely. It's great to be here.
So, today we're diving into a topic that often flies under the radar, but can really make a difference for couples, especially when one partner isn't working. We're talking about spousal IRAs and how they can benefit the non-working partner.
Yeah, it's a fantastic way to ensure that both partners are building their retirement savings, even if one of them isn't earning an income.
Exactly. So we'll break down what a spousal IRA is, how it works, and the specific benefits it offers to couples. We'll also discuss some important considerations to keep in mind.
And let's not forget about the contribution limits and eligibility requirements. Those can be a bit tricky.
Right? And we'll share some practical tips on how to set one up, along with some common pitfalls to avoid.
It's all about making sure you're prepared for the future, together.
So whether you're just starting to think about retirement or are already planning, this is definitely something you'll want to stick around for.
Let's get into the details of spousal IRAs and how they can really benefit you and your partner.
So Alex, let's dive into why spousal IRAs really matter right now, especially for folks over 40.
Absolutely, Jordan. I mean, we're at a critical juncture in so many people's lives, right? As people approach retirement age, they really need to think about maximizing their savings potential, especially if one partner has been out of the workforce for a while.
Exactly. I know a lot of listeners might be thinking, well, my partner hasn't worked in years. How can we boost our retirement savings? But that's where spousal IRAs come into play.
Right. A spousal IRA allows a working spouse to contribute to an IRA for a non-working spouse, which can be a game changer. You can contribute up to the full limit of the IRA, even if only one spouse is earning an income.
And that's crucial, especially with how inflation has been affecting everything lately. The cost of living is rising, and if you haven't been saving enough, it can feel pretty daunting.
Exactly. And let's not forget that life expectancy is increasing. People are living longer, and that means that retirement savings need to last longer than ever. It's not just about having enough saved for a few years. It's about planning for potentially 2 or 3 decades of retirement.
Right. I was reading that the average life expectancy is now over 78 years. For someone retiring at 65, that's 13 years of retirement, potentially more. If one partner isn't saving, that could really put a strain on their financial security.
Yes, and especially for women, who statistically live longer than men. A lot of women might find themselves in a situation where they're relying solely on their partner's savings, which can be risky.
Definitely. It's like they're setting themselves up for a financial challenge later in life. I've heard stories about women who, after their spouses pass away, find themselves in a really tough spot because they didn't have their own savings.
That's a sad, but very real scenario. And it doesn't just affect women. I've also seen men who were the non-working spouse and found themselves in a similar situation. It can create a lot of stress and uncertainty.
And speaking of stress, the emotional side of financial security can't be overstated. People want peace of mind as they age. Knowing you have a solid financial plan can reduce anxiety and allow for a more enjoyable retirement.
Absolutely. And the more proactive you can be about saving, the better. Those contributions to a spousal IRA can really add up over time. Even if you start small, it's the consistency that helps.
I love that point. Let's say you start contributing to a spousal IRA when you're 40. If you contribute the maximum each year and let that compound over time, you could end up with a substantial nest egg by the time retirement rolls around.
Right. And the earlier you start, the more you benefit from compound interest. It's like planting a tree. The sooner you plant it, the bigger it gets.
Exactly. Let's say you and your partner decide to contribute the maximum to a spousal IRA. Over, say, 25 years, that could potentially grow to hundreds of thousands of dollars, depending on your investment choices and market conditions.
And that's critical when you consider the rising costs of healthcare, housing, and other expenses in retirement. You want to ensure you have enough to cover those unexpected costs.
Plus, there's the tax advantage. Contributions to a traditional spousal IRA can reduce your taxable income, which is especially helpful if you're in a higher tax bracket.
Yes, that's a big selling point. You get to save for retirement while potentially lowering your current tax bill. and that can free up more cash flow for other essential expenses.
So it's not just about saving. It's about smart saving. I think many folks might not realize how beneficial this can be until it's almost too late.
That's true. And with the current economic climate, we're seeing shifts in job security and market volatility. Having a diversified approach to your retirement savings, including spousal IRAs, adds a layer of security.
And as we move forward, it's essential to keep this conversation going, especially for those who might feel intimidated by the whole idea of investing or saving.
Exactly. It's about breaking it down into manageable steps. Many people think they need to have everything figured out right away, but it's a process.
So true. And it's also about encouraging open conversations between partners. It's a team effort when it comes to finances, and both parties should feel involved and informed.
Yes, and that partnership is key. I've seen couples who have different views on money, which can lead to conflict. But when they work together and understand the benefits of something like a spousal IRA, it can strengthen their financial relationship.
That's a really good point. And as we're talking about all these benefits, it's worth thinking about real-life scenarios, right? Maybe a couple is in their mid-40s, and one partner has taken time off to raise kids. They might feel like they're behind in savings, but spousal IRAs offer a pathway to catch up.
Exactly. And let's not forget about the flexibility. If one partner decides to go back to work later, they can still contribute to that spousal IRA, which means they're not just limited by their current income situation.
That's such an encouraging thought. It shows that there are always options, and it's never too late to start planning for your financial future, even if things change along the way.
Well said, Jordan. Being adaptable and informed can make all the difference. So let's shift gears and look at some practical strategies for utilizing spousal IRAs effectively.
So Alex, let's dive into some of the core strategies for making the most out of spousal IRAs.
Sure thing, Jordan. One of the first things to remember is that if one spouse isn't working, the working spouse can contribute to an IRA for both of them. This is huge because it allows the non-working partner to still build their retirement savings.
Right, and how much can they contribute?
For 2023, the limit is $6, $500 for each spouse if they're under 50, and $7, $500 if they're 50 or older. So if you're both in that older category, that's a potential $15,000 going into retirement savings.
That's a significant amount. Now, I know there are income limits for traditional IRAs, but how does that affect spousal IRAs?
Great question. For a traditional spousal IRA, if the working spouse's income is below certain thresholds, they can fully deduct contributions to both IRAs. For 2023, if you're married filing jointly and your combined income is below $218,000, you can deduct the full amount. Above that, the deduction starts to phase out.
So if we're above that limit, is there still a benefit to contributing to a spousal IRA?
Absolutely. Even if you can't take the full deduction, contributions can still grow tax-deferred until withdrawal. Plus, it can still be a good strategy for diversifying your tax situation for retirement.
I see. And speaking of growth, what about the investment options within the spousal IRA?
Well, like any IRA, you have a lot of flexibility. You can invest in stocks, bonds, mutual funds, or ETFs. It's important to consider the risk tolerance of both partners when deciding how to allocate those investments.
Right, and that's a conversation worth having. How do you suggest couples approach that discussion?
Start by being open about your financial goals. Do you want to travel in retirement? Or are you more focused on leaving a legacy for your kids? That can greatly influence how you invest.
And what about risk?
Yeah, that's key. If one partner is more risk-averse, it's worth finding a balance. Maybe the working spouse can take on more aggressive investments while the non-working spouse leans towards more conservative choices.
So it's like finding a middle ground that suits both of your comfort levels.
Exactly. And it's also helpful to revisit these conversations regularly, especially as you approach retirement.
That makes sense. Now, what about the mechanics of actually setting up a spousal IRA?
It's pretty straightforward. First, you need to choose a financial institution that offers IRAs. Then, you'll fill out the application for both accounts, ensuring both spouses are listed.
And do you need to provide any specific documentation?
Typically, you'll need to provide social security numbers and some identification, like a driver's license. If you're contributing to a traditional IRA, You'll also have to consider how to handle the tax deductions.
Got it. And what if one spouse is already contributing to their own IRA? Can they still set up a spousal IRA?
Yes, they can. The spousal IRA is independent of the individual contributions. Just remember that the total contributions for both IRAs can't exceed the limits we discussed earlier.
So it's really about maximizing that retirement savings potential.
Definitely. Another strategy is to consider Roth IRAs as well. If you think you'll be in a higher tax bracket during retirement, a Roth could be a smart move since withdrawals are tax-free.
That's a good point. But what if the non-working spouse has income from something like freelance work?
In that case, they can contribute to their own IRA up to their earned income limit. But they still can't exceed the contribution limits we talked about.
So it's important to keep track of that, right?
Absolutely. Keeping clear records of all income sources will help ensure you're maximizing contributions without running into tax issues.
And what about withdrawing from these accounts? Are there any age restrictions or penalties?
Yes, generally. You can start withdrawing from IRAs without penalties at age 59 and a half. But with traditional IRAs, you'll owe taxes on withdrawals, while Roth IRAs allow you to withdraw your contributions at any time without taxes or penalties.
So if someone is considering withdrawing early, they should really think twice about it.
Definitely. Early withdrawals can come with hefty penalties and tax implications. It's really meant to be a long-term investment.
That makes a lot of sense. I can see how important it is to have a solid plan for managing these accounts effectively.
Right. And that leads us into some common pitfalls. Many couples overlook how important it is to coordinate their contributions and investment strategies.
Like not communicating about how much each partner is contributing.
Exactly. And sometimes, one spouse may not fully understand the implications of the investments being made.
So they might be setting themselves up for surprises down the line.
Yes, and then there's the issue of failing to review and adjust the investment strategy as life changes.
Such as when kids leave home or when they're nearing retirement, right?
Exactly. Life changes can significantly impact financial goals and risk tolerance, so it's important to stay in sync.
And to revisit those discussions regularly.
Yes, that's crucial. It's also wise to consult with a financial advisor periodically to ensure that you're on the right track.
All of this makes me realize how important it is to not just set it and forget it.
Absolutely. It's an ongoing process, and staying informed and engaged is key to building long-term financial security.
So now that we've covered the strategies and potential pitfalls, let's transition to discussing some immediate steps listeners can take to implement these ideas. You know, Alex, when it comes to spousal IRAs, there are definitely some common pitfalls that people fall into.
Absolutely, Jordan. One of the biggest mistakes I see is couples assuming that just because one partner isn't working, they can't contribute to an IRA.
Right. I mean, it's easy to think that if you're not earning income, you can't save for retirement. But that's not the case with spousal IRAs.
Exactly. A non-working spouse can still contribute based on the working spouse's income. But, I've seen couples miss out on this opportunity just because they didn't understand the rules.
Yeah, can you give an example of that?
Sure. I had a client, let's call them Tom and Lisa. Tom was the primary earner, and Lisa had been a stay-at-home parent for several years. They didn't realize they could open a spousal IRA for Lisa until it was almost too late in the tax year.
Oh no. So what happened?
Well, they ended up not contributing for that year, and Lisa missed out on the tax benefits and compound growth potential. It was a real eye-opener for them.
That's tough. It must have felt discouraging.
It did. But it taught them a valuable lesson about being proactive. They now keep track of deadlines and contributions every year.
That's a good point. Staying informed is really key. What are some other pitfalls people should watch out for?
Another common mistake is thinking that a spousal IRA is just a backup. Some couples treat it like an afterthought, only contributing the minimum amount or skipping it altogether.
Right, they think, we'll get to it later.
Exactly. But those late contributions can really add up over time. It's all about maximizing that growth potential while you can.
So it's not just about contributing, but contributing wisely and consistently.
Yes, and let's not forget about the tax implications. Some couples overlook how spousal IRAs can affect their overall tax strategy.
Can you elaborate on that?
Sure. For instance, if the working spouse is in a higher tax bracket, contributing to a spousal IRA can lower their taxable income. But if they neglect this, They might miss out on significant tax savings.
Wow. It's like leaving money on the table.
Exactly. Speaking of tax implications, another pitfall is not understanding the withdrawal rules.
Right, because if you're not careful, you could incur penalties.
Yes! For example, I had a couple, Mike and Sarah, who withdrew from their spousal IRA early to pay for a home renovation. They didn't realize they'd face penalties for that.
Ouch! That must have been frustrating for them.
It was. They ended up losing a chunk of their savings that could have grown. Now they're much more cautious about withdrawals.
That's a hard lesson to learn.
It is. And then there's the misconception about contribution limits. Some people think they can contribute more than the allowed limit just because they have multiple accounts.
So they think if they have a spousal IRA and a regular IRA, they can double dip.
Exactly. But the IRS has set limits for total contributions across IRAs. If you exceed those limits, you could face penalties.
Wow, that's a lot to keep track of.
It can be, which is why I always advise couples to sit down together and make a clear plan.
Yeah, like a financial date night, right?
Exactly. It can be a great way to stay connected and informed about your finances.
So it's about communication as much as it is about numbers.
Definitely. And I think another danger sign is when one partner is completely disengaged from the financial discussion.
That's interesting. Why is that a red flag?
Well, if one partner isn't involved, it can lead to misunderstandings and resentment. If something happens to the working spouse, the non-working partner might feel lost or unprepared.
That's a scary thought.
It is. So encouraging both partners to be involved in their financial planning is crucial.
It sounds like education is really key here.
Absolutely. The more informed both partners are, the better decisions they can make together.
What about those couples who might be hesitant to open a spousal IRA because they're worried about the future?
That's a valid concern. Some fear committing money to something they might not need, but a spousal IRA is often a smart long-term strategy.
So it's about looking at the bigger picture?
Exactly. They should focus on the potential for growth and security, rather than just short-term concerns.
What about life changes? How can those impact spousal IRAs?
Great point. Major life events like divorce or the death of a spouse can complicate things. People often overlook how these situations can affect their IRAs.
That must be an emotional time too.
It is, and it's crucial to reevaluate your financial situation during those times. A spousal IRA can become a significant part of a financial strategy moving forward.
So being adaptable is key?
Absolutely. Life is unpredictable, and your financial plans should be flexible enough to adjust.
So how can couples recognize these danger signs?
Well, if you notice one partner is consistently absent from discussions, or if there's a lack of understanding about the IRA's benefits, those are red flags.
And I guess if they're not maximizing contributions, that's another sign?
Yes. If contributions are minimal or sporadic, it could indicate a lack of awareness or engagement.
So what can couples do to recover from these mistakes?
The first step is education. Learn together about spousal IRAs and the benefits they offer.
And maybe revisit their financial goals?
Definitely. Setting clear, shared goals can help both partners stay on track.
So those are some immediate steps you can take. Now let's bring everything together. So moving into the actionable steps, what can our listeners do right now to take advantage of the benefits of spousal IRAs?
Well, first things first. If you haven't already, both partners should sit down together and discuss your overall financial goals. It's essential to be on the same page.
That makes a lot of sense. Getting aligned is key. What's next?
Next, I'd recommend checking if you're eligible to contribute to a spousal IRA. Remember, the income limits for traditional IRAs can vary, so you want to make sure you're within those thresholds.
Right, and if one partner is not working, that doesn't mean they can't contribute, right?
Exactly. In fact, the working partner can contribute on behalf of the non-working spouse. So if you've got a working spouse, you can contribute up to the maximum limit for both your accounts.
And what's that limit again for 2023?
For traditional and Roth IRAs combined, the limit is $6,500 per person, or $7,500 if you're over 50. So that's a potential of $13,000 or $15,000 for couples.
That's a nice chunk. So what's an easy way to start making those contributions?
You can set up automatic contributions through your bank or investment platform. Just decide how much you want to contribute and set it to withdraw from your checking account regularly.
That sounds simple enough. Are there any tools or apps you'd recommend for managing these contributions?
Definitely. Apps like Mint or Personal Capital can help you track your finances and budget for those IRA contributions. They allow you to see your income, expenses, and how much you're saving toward your retirement goals.
I love that. It's like having a financial dashboard. What about actually choosing the investment options within the IRA?
Great question. For beginners, I usually suggest considering low-cost index funds or target date funds. They provide diversification and are generally less risky than individual stocks.
So, you're saying to keep it simple and not overthink it?
Exactly. And if you want to get a bit more involved, you could look into robo-advisors like Betterment or Wealthfront. They'll create a diversified portfolio based on your risk tolerance and goals.
Nice! Now, what if someone feels overwhelmed by all of this? Where can they start small?
Starting small is perfectly fine. You can begin by contributing just a little each month, even if it's $50. The key is to build the habit of saving and investing. Over time, those contributions will add up.
And that's so encouraging. Just taking that first step can make a big difference.
Right? And another good habit is to review your progress regularly, maybe once a quarter. This gives you a chance to adjust your contributions and ensure you're on track.
So like a financial check-in?
Exactly. It's a good time to reflect on your goals and see if anything needs changing. You could also read books on personal finance to expand your knowledge.
Any specific recommendations?
The Total Money Makeover by Dave Ramsey is a classic. It's straightforward and offers a lot of practical advice. Also, I Will Teach You to Be Rich by Ramit Sethi is very engaging and offers actionable steps.
Those both sound great. It's all about continuous learning, right?
Absolutely. And don't forget to consider tax implications when making contributions. Consulting with a tax professional can help you understand how contributions to a spousal IRA might affect your tax situation.
That's a good point. It's not just about saving. You want to make sure you're optimizing those savings as well.
Exactly. And remember, you can always adjust your contributions based on your financial situation. If you get a raise or pay off a debt, consider increasing your IRA contributions.
Such a smart way to build that financial cushion.
And don't overlook the importance of communication between partners. Regularly discuss financial goals and any concerns. It'll make the process smoother.
Yeah, keeping that dialogue open can really strengthen your financial partnership.
Right, and lastly, I'd suggest setting a timeline for your goals. Whether it's retirement in 20 years or saving for a big trip next year, having a timeline can help keep you motivated.
That's a smart approach. It gives you something tangible to work towards.
Exactly. So those are some immediate steps you can take. Now let's bring everything together.
So, as we wrap up our conversation on spousal IRAs, it's clear there are some important points to remember.
Absolutely, Jordan. First off, a spousal IRA can be a game changer for non-working partners. It allows them to contribute to a retirement account, which is crucial for building that long-term financial security.
Right, and it's also a way to take advantage of the tax benefits that come with IRAs, which can really boost retirement savings.
And don't forget about the power of compounding interest. The earlier you start contributing, the more your money can grow over time. It's about giving that non-working partner a chance to create their own financial future.
Exactly. Plus, it encourages better financial planning as a couple. Having those discussions can strengthen your relationship while ensuring you're both on the same page regarding your financial goals.
Very true. And one last point, it's essential to keep track of contribution limits and deadlines. Staying informed can prevent any costly mistakes.
Those are some solid takeaways, for sure. You know, it's never too late to start thinking about your future, and every small step counts when it comes to building wealth and security.
Definitely. And remember, it's all about progress, not perfection. Just take those steps forward together.
If you found this conversation helpful, please like, subscribe, and comment your thoughts below. And if you know someone over 40 who could benefit from this, share it with them.
Yes, and next time, we're diving into retirement calculators and the best free tools you can use to plan your future effectively.
That's going to be exciting. So until then, take care of yourselves and keep working towards that financial freedom.
Absolutely. See you next time.